Hello investors, I'm Stuart Kruse and welcome to Kruse Asset Management Trading Tuesdays. On Tuesdays is where we take a look inside our quantitative strategies. We run a large cap, international and a small cap portfolio where we make stock selections based off of fundamental characteristics that have tended to outperform a year from that time. So right now we're going to look at our small cap portfolio. And before we jump into any kind of trading names, let's look at how last month's names did. And we, right now I have on the chart from our friends from White Charts, the Schwab US Small Cap ETF. And since September 23rd, the small cap ETF is up over 11%. So an amazing run and has outpaced the S&P 500. That's for sure. Let me put that up there. I'll just put the SPYs up so we can see it. So almost doubled the S&P 500 has done the small cap, but they're due because they've been underperforming and have been lagging behind considerably for years. But we'll remove that off of the chart here and take a look at our three buys from last month. We got HIBB Sports up 33%, Marine Max up 20%, and Big Lots up another 20%. So averaging up a little 23.3% in the 30 days or so since we made the recommendation. So more than doubling the returns of the small cap index itself. So those would have been great trades or great buys to buy had you picked them up when we suggested to do so. All right, so let's move on to today's topic. Right now we have up here Life Advantage Corp, LFVN. These guys sell neurotropics. They basically are selling supplements, and that's been a very popular topic given the lockdowns and the more focus on health. We have Duluth Holdings, which is a retail company, and then you have Superior Group, which provides uniforms to the industrial space. So retail has been on fire and industrials have done really well. So let's take a look. We just basically have these charts up from 2017, kind of a random number. These things are up considerably over the last couple of years, 3 years. But really what I'm interested in is, let's take a look at some of these ratios. You have PE ratio, and these are the changes over time. So if we're looking at the Life Advantage, the PE ratio has come down considerably, 74%. Only Duluth has been flat, and Superior Group is also down. But when we look at earnings per share of Life Advantage is up 737%, which is why the PE has compressed, because earnings, the E and the PE is blowing up there. So you've got some great earnings results over the last 3 years on all of these companies. Well, Duluth is actually down 12%. But Life Advantage up, Superior Group up considerably. And if we look at the revenues, also we'll see while the revenues of Superior is up 41%, revenues of Duluth up 30%, and of Life Advantage up about just under 15% over those last 3 years. So in combination with these factors, we're basically looking at characteristics of stocks in combinations that have tended to lead towards outperformance a year from that point in time. Now we saw the last month's small cap portfolios have significantly outperformed, and hopefully this will be the case this month. And quite honestly, in any given month, it's about a 50-50 shot of whether you're going to see outperformance. But as the timeline increases, you start to see more and more outperformance or odds of outperformance. And that's really what we're trying to do here at Kruse Asset Management, is slant the odds in our clients' favor. So as we always say, don't forget to invest with the odds in your favor. This is Stuart Kruse with Kruse Asset Management, signing off on Trading Tuesdays.